Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, November 20, 2023. US dollar extended its slide with the dollar index hitting lows not seen since August. The greenback remains under pressure as traders scale back expectations for Fed rate hikes following the latest soft inflation data. Markets are now pricing in around a 30% chance of a Fed rate cut as early as March. The dovish Fed outlook continues weighing on the dollar against major rivals. The euro pushed higher while the offshore Chinese yuan hit its strongest level since August after the BOCKET set its daily fix at a firmer rate. In equities, US index futures edged up, pointing to gains after the S&P 500 closed at an 11-week peak on Friday. Stocks may get an added boost from Microsoft, which climbed over 2% pre-market. The tech giant hired OpenAI executives to lead its artificial intelligence efforts, underscoring the value big tech firms see in AI capabilities. European shares traded mixed as gains were capped by negative headlines. Bayer plunged after halting a trial of its promising heart drug due to safety concerns. The German pharmaceutical giant also suffered a legal setback in the US related to its Roundup weed killer. Its American peer Bristol-Myers Squibb dropped over 4% in sympathy. UK equipment rental firm Ashtead plunged after downgrading its revenue outlook amid weaker end markets. And Swiss bank Julius Baer fell sharply after warning of profit declines due to higher loan loss provisions. On the upside, Italian banks rallied after credit rating agency Moody's improved the country's debt outlook. This eased fears of a junk rating, leading Italian bond yields lower. In commodities, natural gas prices spiked over 6% on supply risks after a vessel seized by Yemeni rebels heightened Middle East tensions. Colder weather forecasts also drove up prices. Oil similarly climbed ahead of this week's OPEC+ meeting, which may see the group stick with output cuts to shore up prices. Turning to central banks, an ECB official warned that more rate hikes may be needed if market expectations for cuts undermine policy tightening. Several ECB speakers are lined up this week, whose commentary will provide clues on rate trajectory. On the data front, the US has a relatively quiet week with markets entering holiday mode for Thanksgiving. The highlight will be minutes of the Fed's November meeting on Wednesday. Other events that could impact trading include Tuesday's RBA meeting minutes and a speech by the Australian Central Bank Governor. Additionally, Bank of England policymakers will testify before Parliament, flagging any shifts and outlook for UK rate hikes. Rounding up market action, Japan's Nikkei rallied to its highest level since 1990, capping a nearly 30% annual gain aided by a weaker yen and upbeat earnings. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. The main movers against the dollar over the past week have been the Australian dollar, up nearly 3%, and the euro, which rose over 2% to break back above 1.09. The pound also climbed around 2% against the greenback, aided by easing recession fears in the UK. Looking at the dollar's performance against individual currencies, its losses were most pronounced versus the Aussie dollar. The Australian dollar to US dollar pair gained momentum to reach its highest level since August, breaking above 0.6550 in early Asian trade. The euro equally powered higher against the dollar, stretching beyond 1.09 for the first time in over 2 months. The euro to US dollar pair continues hovering near 1.0950, though struggling to maintain upside momentum. After its pullback midweek, cable recouped losses to advance toward 1.2500 ahead of the weekend. The pound sterling to US dollar pair now holds steady above 1.24, with limited action expected ahead of scheduled remarks from Bank of England Governor Andrew Bailey. Meanwhile, the US dollar to Canadian dollar consolidated around 1.37 after minor losses last week. Loonie pairs could see added volatility with Canadian CPI data due tomorrow. Shifting to safe haven currencies, US dollar to Japanese yen extended south after breaking the key 150 threshold late last week. The pair remains under selling pressure below 149 in today's Asian session. In commodities, gold prices erased small gains on Friday to close unchanged on the day. But the precious metal still managed a weekly advance of over 2%, aided by broad dollar weakness. Gold ounce per US dollar now hovers just under 1,980 as markets lack firm direction early Monday. Equity index futures are pointing to a lower open on Wall Street, while Asian indices traded mixed. Hong Kong's Hang Seng rallied over 1.5%, with mainland stocks also climbing between 0.5 to 1%. On the data docket, the Eurozone session brings October construction output figures. But the spotlight falls on the US 20-year bond auction later today, which could impact trading sentiment. With US markets entering holiday mode for Thanksgiving week, trading volumes are expected to decline. Major data releases are also absent from the US calendar. However, there are a few events that could spur some localized volatility. First, the Reserve Bank of Australia's November meeting minutes and a speech by RBA Governor Bullock are due early Tuesday. Additionally, several Bank of England policymakers including Governor Bailey will testify before UK Parliament later this week. Their commentary will provide fresh clues on potential rate moves at the BOE's next meeting in December. In summary, the dominant theme remains US dollar weakness as markets temper their tightening expectations for the Fed. Stocks are treading water while bond yields hold steady after last week's gains. Key events this week. European Central Bank Governing Council members Pablo Hernández de Cuz, François Villeroy de Galhau, Boris Vujicic speak at separate events, Monday. Bank of England Governor Andrew Bailey speaks, Monday. U.S. Conference Board leading index, Monday. European Central Bank President Christine Lagarde speaks, Tuesday. Canada CPI, Tuesday. Federal Reserve November Policy Meeting Minutes, Tuesday. Nvidia earnings, Tuesday. Eurozone consumer confidence, Wednesday. U.S. initial jobless claims, University of Michigan consumer sentiment, durable goods, Wednesday. Eurozone PMIs, Thursday. UK S&P Global/SIPS manufacturing PMI, Thursday. European Central Bank publishes account of October policy meeting, Thursday. Thanksgiving holiday in the U.S., Thursday. Japan CPI, Friday. Germany GDP, Friday. U.S. manufacturing PMI, Friday. Black Friday sales begin, Friday. Some of the main moves in markets. Stocks. S&P 500 futures were little changed as of 7:32 a.m. New York time. Nasdaq 100 futures rose 0.1%. Futures on the Dow Jones Industrial Average were little changed. The Stoxx Europe 600 was little changed. The MSCI World Index rose 0.1%. Currencies. The Bloomberg Dollar Spot Index fell 0.3%. The euro was little changed at $1.0924. The British pound was little changed at $1.2471. The Japanese yen rose 0.9% to 148.35 per dollar. Cryptocurrencies. Bitcoin rose 0.4% to $37,144.29. Ether rose 1.9% to $2,020.78. Bonds. The yield on 10-year treasuries advanced 4 basis points to 4.48%. Germany's 10-year yield advanced 5 basis points to 2.63%. Britain's 10-year yield advanced 5 basis points to 4.15%. Commodities. West Texas Intermediate crude rose 1.5% to $77.05 a barrel. Spot gold fell 0.5% to $1,971.83 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.